really welcome to New York. And thank you for taking the time to speak with Sings, because we believe in helping the next generation.
Sure.
And we're delighted that you will take a little bit of time to answer some of their direct questions. The first question really involves the tension that's going on geopolitically. And the first question is, given the increasing geopolitical fragmentation, how do you foresee China's role in global innovation evolving over the next decade? Given that, what strategies should investors adopt to navigate these dynamics?
Yeah, so I got this question a lot. In general, I feel China, if you look at economy, it's been weaker. But if you look at technology, it's much stronger. My way of thinking of it is just still an analog from ChatGPT. Essentially is, with China, I think in the world there are about 220 subsectors. And 40 years ago, and Chinese, if there is sort of an Olympics for businesses, China probably won't be qualified for competition of most of these 220 subsectors. But today, I think they will get at least a medal in all of 220 sectors. So I'm coming back to this ChatGPT analog, that is you actually have most of very diverse competition in China in virtually everything.
Amongst each other, even amongst each other.
And they're all coming into this kind of model. And the stuff will come out. So people have been hearing about DeepSeek, Unitree. Those are just sort of emergence of innovations. So I think the innovations are pretty deep and wide right now. Most of markets out there in the world, they're a bit more narrow, and a lot of countries are strong for certain things, but not strong for many other things. But China is where you have AI meet hardware and software and supply chain. This is a rare convergence in the world. As a result, you start to see stuff come out. Innovations, you can never predict innovations. Innovations always come as a surprise. So I think people in China, I would say, there's just a lot of talents to work hard. If you look at the economy, this is a longer question to answer. But overall, I think, just remember, for the last 30, 40 years, China never really had a serious downturn. If you live in America as a consumer or investor, you probably have experienced at least 3 downturns. And so it's a very different setup. So for China to go through this, people argue it's a structural, but I argue it's probably also a little bit of a combination of structural and cyclical. So it needs to have a reset, and let's see what happens.
Okay, thank you for that. You encompassed many areas, so we appreciate that. The next question is, with the global rise in interest rates making traditional investments like U.S. Treasury bonds more attractive, how is M31 Capital adjusting its approach to investing in high-risk, high-reward sectors, such as the sectors you mentioned, AI and electric vehicles, and maybe batteries, etc.?
I think you clearly identified the cost of capital has gone up. And with so many things are happening, the risk premium has gone higher. So it is making the market very difficult, especially from investing perspective. But having said that, there's always a flow of capital. And it is about how you adjust to the new paradigm. Because actually, to have this period for like 20, 30 years, very low cost of capital is actually abnormal if you look at history. So everything we're looking at right now, what we're dealing with, you feel like there are a lot of uncertainties. But I actually think this is a normal environment. Honestly, if you look back in history, there hasn't been like over 10 years, even just for 10 years, and really low cost of capital. Now we had seen like that last 30 years. But in front of us, there are some very exciting things. We're seeing steepening curves for a lot of innovations. If you look at AI, it's a curve. That curve itself will surprise a lot of people. So I think at the end of the day, people are all going to come back to this thing called productivity gains. If the gains are larger than where the cost of capital is and risk adjusted, people will come back. I see most of people spend way too much time in paying attention to events, and they pay much attention to trends. So now I think about 80% people spend time on events, not trends. So I think this is where I think there are some very interesting dislocations.
Well, I'm really looking forward to hearing what the trends are later on in the evening. All right, moving along. China is advanced in robotics, EVs. And the country is leveraging its supply chain to maintain competitive edge. How are they doing that? What implications does this have for global investors seeking exposure to China's industrial sectors? So the question is, how is the country leveraging its supply chain capabilities to maintain a competitive edge?
Yeah. I'll give you two anecdotes to talk about this. One is TSMC.
Yeah.
Rewind 20 years ago. There is a long period of people looking at TSMC and think this is just manufacturing business. And because for each of the cycle, they have to upgrade their foundries. There's always like next generation foundries. The amount of investment they made, they cannot recoup. And before actually making the next round of investments. So investors will look at that model and say, oh my goodness, this thing is like more like industrial. It's a cyclical. So I'm going to pay very little multiple for it. But today you look at TSMC, most of people call the company a technology company. 20 years ago, they called this company an industrial and cyclical company. But how did the company has kind of come about for the last 20 years? And that's a really good case study for people to understand how a business, they look like more like manufacturing, but today it's called technology. But where is the technology content? It's actually in the process itself. Another example, I was just in Europe. I brought 20 top Chinese CEOs with me. We traveled in Europe. We went to Sweden. We went to Germany, Munich specifically, and Madrid in Spain. It's really, really remarkable. Some of the top European CEOs, they said, I have to go to China. And I have to go to China. I have to embed with the Chinese supply chain system. With that expertise, I'm going to compete in the world.
So
now they say that China speed, essentially, this is the thing they want to learn from. And you might have capital. You buy all the equipment, the best in the world. Somehow when you all put them together in a factory, it doesn't work. There is a case, I want to say which company that is. I just want to see it. They spend billions, tens of billions of dollars on this thing. And the yield is like 35%. China can get to 95, 96%. And they have all the equipment. They claim they have all the smartest people from around the world. It didn't work. And because for manufacturing it's like you have to have many iterations. So the way it works is you try and you experiment, and if something goes wrong, you close the loop and you try to improve for the next iteration. Just so many iterations happening within a short time frame. So the curve of learning, experience curve is pretty steep. For some other people, they haven't done this before. You buy all this equipment. You have people so-called, everybody had a lot of experience, but not real experience. For them, this takes forever. It's about two curves.
Right. What you're saying is China's technology has eclipsed already for quite some time.
Honestly, I think when it's coming down to supply chain, is all about efficiency, the yield. That's what we're talking about.
Right. Okay, got it. Maybe the last question. In light of the current economic volatility and geopolitical uncertainty, and we'll address Iran later on, how does M31 Capital support its portfolio companies adapting their strategies? What key factors do you consider when helping these companies navigate challenges and seize new opportunities?
That's a great question. So there are only two types of businesses, to C or to B. Yeah, to B, meaning every company can be your customer. So what we're trying to do is we're just connecting dots with most of global leading companies and bringing their CEOs, their CTOs to the things where we gather and get everybody in the room to talk about collaboration, licensing, and joint investments, and all that stuff. I think what happened to all of us was 4 years ago, 5 years ago, COVID stopped the flow of quality information. People actually are stuck in their silos. And also, labeling is really easy exercise for human to judge on people. So there's a lot of labeling going on. But when you bring people together in one room, they start to talk about, for example, the same manufacturing process. You do, she does, I do. And metric by metric, step by step, people start to realize where the gaps are. And the people really start to respect each other. They understand because it's all the challenges and tasks in front of them as well. So that's where people get really connected, and it's a people. It's someone they respect. It's almost like if you're a basketball player, and then somebody is really good, then you're just going to have a great respect to that basketball player, especially that basketball player has good manners, and you feel like you can play together. So you know what I mean? So that's where I think magic happens. The problem today is people don't spend much quality time together. They don't huddle. And so that's why I think it creates a lot of misperceptions on things. But having said that, if you look at innovation, and it's all, the curves are steepening, and everybody don't want to be left behind, they want to participate. So this is what I'm trying to do. Connect the best companies. We invest, we're going to invest with the best companies in the world. By the way, in that process, you also have a good understanding, are the company you want to back, or you backed, are they good enough? Because other people in the same field, they're going to tell you who could be their customers. Are they good enough? And it's really interesting. I think companies, when they start, they compete on products. But when they start to compete globally, it's your strategy, your ethics, is many other things. That is a true test for a great management team. It's not just product.
Someone has told me that you're a really great connector and networker, and you love meeting people, and you get to know CEOs and CIOs and CTOs, deeply, and that's how you choose your investments. So I can see that very well, how what you just described in terms of how you go about selecting.
Yeah, and if I may, I'll just kind of explain this a little bit. I'm a big believer in math. So in mathematics, we're talking about networks, and there is a type of network called scale frame. So essentially is if you're able to link all the supernodes, meaning where the most of traffic go to the supernodes, you could, with a small scale, you can replicate the world. And essentially is you have to bring in the most capable supernodes into your network. Magic happens, so then you just wait for the results to come. It's a mathematical exercise.
Now I know why you're our top quartile money manager. So congratulations. Thank you very much.